All right. It looks like we are live. So welcome everybody, and thank you for tuning in for this special Halloween FinCrime Friday chat. It's great to be back and great to be talking about the Genius Act today. So super interesting topic. I'm really excited for us to get into it. As usual, I am Clayton Norman, your host. I am the social media and digital marketing manager for Serify. I'm actually wearing my Serify shirt today, which is the parent company of ACFCS. We have our incredible expert savants here, Aaron O'Loughlin, our senior director of training, and Brian Svoboda Kindle, our vice president for product and programming. And guys, we are excited to have you here. So let's do a quick roll call. Let us know where you're tuning in from and where you're watching from today. We love seeing that. And also, since it is the spookiest day of the year, let us know if you've got a Halloween costume. We would love to hear what everybody's got going on in that arena today. So let me click over here so I can see our comments and so we can make sure that we're seeing everybody who is tuning in. Like I said, let us know where you're watching from. We love to see that. And as usual, everything that we're going to be talking about today, all of the different opportunities for training, for live events, for upskilling and leveling up your career is going to be supported by acfcs.org. So if you're not a member, fix that. Head over to acfcs.org right now, or as soon as this broadcast is over, and become a member. The bang for your buck when you become an ACFCS member is off the charts. The membership fees are very reasonable, and you get access to hundreds. Guys, is that an exaggeration? Hundreds of hours of training, at least hundreds of hours of training.
Hundreds of hours.
Access to special events. Jay, it's great to see you again. Love having you here. You're always coming back and having such great questions and comments. Thank you. Anyway, you cannot beat the value that you get by becoming an ACFCS member in terms of the training, the access to live events, access to experts, and of course, the incredible community and networking opportunities that come with being a member and tapping into this incredible community that, as you can see, people who are sharing where they're tuning in from is actually, not exaggerating, it is a global, worldwide community. We have people joining from Cassandra from Washington, Jay tuned in from Vancouver, Canada. We've got somebody from Texas. Love it. I'm from Nacogdoches originally. And Aaron is also based in Texas. So keep them coming, guys. We love to see those. And again, let us know if you have a Halloween costume, if you're going trick-or-treating tonight, what you're going to be dressed up as. So as usual, before we jump into talking about stable coins, crypto, and the implications of the Genius Act, which really excited to get into this one. We got some FinCrime lines that we're going to jump into. So, and we'll just go rapid fire, Brian and Aaron, whichever one of you wants to jump in on this first one and share your thoughts. The headline here is Interpol seizes $97 million from crypto scams as Circle considers reversing stablecoin transactions. And I guess Circle is a organization or a stablecoin issuer. Synopsis is Interpol announced it froze roughly $97 million in crypto assets tied to scam operations and highlighted the major stablecoin issuer Circle may reverse transactions tied to illicit activity, underscoring increasing enforcement pressure on stablecoins used in fraud. This seems like a good thing, enforcing and taking action against fraudulent stablecoin issuers. What do we think about this one, guys?
Yeah, I mean, I'm happy to jump in with some thoughts on it. So this is an Interpol operation. I think they do this annually, and it's across a whole bunch of countries, 40 countries and territories. They do this, and it targets cybercrime. So this is HE6, the sixth HE. I don't know what. I think it's an acronym for something, but I'm not sure what it is. But it is a cybercrime focused effort, and every year the number goes up in terms of like total seized and disrupted, which I think speaks to the scale and scope of cybercrime. it was close to 500 million in total assets, including a lot of bank accounts seized and about 97 million worth of crypto assets, which also has considerably ticked up over the years. I think one thing that stands out to me is really the advances law enforcement have taken in tracing and seizing crypto assets, and explicitly, the in the story that you're referencing, there's some interviews with members of Interpol there who talk about how this is possible, and I think it's a good lesson to the industry as a whole, and law enforcement really around the world, that this is doable, and it's increasingly doable with the blockchain analytics tools, with the increase in awareness and training out there. Hint, hint, we have a really good program on that front, to be able to trace and seize crypto assets. It's not, yes, they move fast. Yes, the transactions are in most cases immutable. Yes, it's international, but that doesn't mean it's untouchable. And this is just one of the cases that demonstrates that. So it's not easy. I don't want to sit here and be like, oh, why aren't they getting it? But I think, this story of like, we can't trace crypto, we can't seize it, we can't bring enforcement actions against it because it, moves somewhere overseas and it's untouchable is not quite, it's not quite true anymore. The other piece of it, that circle thing, I wouldn't make too much of it. I think it's interesting, but if reading the quote from the president of Circle, he's like, "Yeah, we're considering when and how we could maybe do it in certain circumstances on certain blockchains with certain crypto assets." So there's a lot of maybes in there. Now, the fact that they are considering reversing transactions is interesting, because if we go back to the early days of crypto, one of the key features, and really, it wasn't a bug or a problem, it was designed this way, was that these were immutable transactions. There was no way that once it was sent from one wallet to another, you were getting that back. It's done. And that was done in order to produce a system that wasn't intermediated. There were not central authorities who were able to claw back transactions like the banking system. The digital assets ecosystem, even bigger than cryptocurrencies, is highly intermediated at this point. You have, Circle, who issues the USDC coin, one of the largest stable coins out there. We'll be talking about stable coins throughout this, saying, hey, maybe under certain circumstances, want to think about clawing back transactions. It's a big shift in the wider ecosystem. Is it a good or bad thing? I think it depends on your perspective. From a financial crime perspective, there's a lot of advantages to it. And it does produce an opportunity to deal with a lot of the fraud, sanctions, and financial crime risks that we still see in the crypto ecosystem. So that's my take.
Well, it seems like progress, at least in terms of some regulation and some ability to recover, work on some of these issues. Okay, we'll hop into the next one, but just wanted to highlight Bob from Toronto is going to be wearing blue tonight, not a Halloween costume, but supporting the Blue Jays. I don't know if we have any Dodger fans that are tuning in. Not going to wade into taking a side on that one, but good for you, Bob. We're glad to have you in the conversation. Also, guys, as we go through not only these news stories, but as we get into the deeper conversation, if you have questions, comments, if anything that we're talking about speaks to your experience or raises a question with you, absolutely share those in the comments. We will make time to answer those. We'd love to have those questions coming in. So, all right, second headline. And also, Brian, I think you brought this one to us. The chairman of Prince Group indicted for operating Cambodian forced labor scam compounds engaged in cryptocurrency fraud schemes. So an indictment was unsealed charging Chin Ji, also known as Vincent, chairman of the Cambodian-based Prince Holding Group, with wire fraud and money laundering conspiracies for directing forced labor scam compounds in Cambodia, where victims were trafficked and forced to conduct pig butchering crypto investment fraud across the globe. The DOJ simultaneously filed a civil forfeiture complaint seeking about 127,271 Bitcoin, worth approximately $15 billion, linked to these scams, marking the largest forfeiture action in U.S. history. And geez, that is just like a financial crime parfait, financial crime stacked on top of financial crime, stacked on top of financial crime. Brian, what's going on here?
Yeah, fascinating case. It's like reads like a CFCS exam question when you dig into the transactional flows and the activity involved, particularly like the network of shell companies to launder these funds. But this all links back into something that we've talked about quite a bit on these FinCrime Fridays, as well as within our member webinars, events, so on and so forth, our online training courses, which is the stunning rise of romance, of scams in general, particularly romance scams. Um, this guy, Vincent or Chen Zi, um, was the head, allegedly, of a vast scamming empire. He was very well connected in Cambodia. There's this huge element of political corruption to this story that we don't necessarily have time to get into, but working with corrupt public officials to build these scam compounds, and a lot of this activity dates back to, like, at this point, going on 9 years ago, almost 10 years ago, when some of this wasn't even very well recognized at that point. But early scam, Sihanoukville, and some of the hotels and casinos in that area of Cambodia were where a lot of the early pig butchering operations were run out of. He and his operation was very much embedded with that. Ran casinos, ran these scamming compounds out of there, and built up a vast empire of scamming. I think back in like 2018, according to some of the documents, he was already earning $30 million worth of USD per day in fraudulent crypto investment schemes. His criminal group, and that was 2018, right? I don't know that most people were really even talking about pig butchering at that point, and it was already taking place at vast scale, right? Um, so I mean, it's fascinating to see how long this activity progressed. It's awesome to see this global effort. This was a coordinated UK-US effort. Shows that the US is really serious about cracking down on pig butchering scams and scamming more broadly. And it had this largest ever $15 billion forfeiture involved. Now, what's really interesting is that $15 billion forfeiture, the Bitcoin involved in that, if you read the forfeiture document, it's hard to tell exactly where it came from. There's also a Chinese crypto exchange that got hacked, and it appears that those funds came from a crypto exchange hack and were potentially already in wallets that were in US custody before this whole thing got revealed. So it might be a situation in which later tracing, again, we talked about the advancements in analytics, the advancement in law enforcement tracing from one criminal scheme led to attribution in another criminal scheme. They're like, oh, these guys who did this were also, they were able to figure out through tracing analytics that they're also involved in this. They're like, okay, well, now we can include this in a forfeiture complaint, right? So it's interesting to see, the kind of reading between the lines there, how the advancement in investigative techniques may have played out in this case too. But ultimately, I think to your point, Clayton, this is a very positive development. I think we have a ton of work to do still against scamming. It's not like it's gone from Cambodia, but since the events have all, like, a lot of the scam comments actually moved out of Cambodia into Golden Triangle area like Laos, Myanmar, where there's even less supervision and ability to reach it. So a lot more work to be done, and Aaron West and many others are out there, on the industry side and the connections with law enforcement side, doing that work. But it's encouraging to see the US and UK government take kind of a whole of government approach against it too. Aaron, what do you think?
I am super excited about, not about the fact that it's happening, obviously, it's horrible, but I'm super excited that we have a headline that says DOJ has filed a civil forfeiture complaint seeking $15 billion from this particular crime, this MO of the crime that they're doing, because it's been around for, like you said, for so long. And I just want to encourage folks to learn more about it. There's a show that I'm now addicted to. I watch it on Hulu. It's called Trafficked. And there's actually an episode where, gosh, what's her name? Maria something.
Yeah, Maria Vander something.
Yeah,
And
she's
yeah,
great. I love her. She'll go into these places and she'll, I don't know if it's any of it's staged. I have no idea if it's real or not, but they're talking about things that we actually train on. So that's where I get my excitement from, to say, look, this is an example of what we're fighting against in these financial institutions. There is this episode where they are talking about the Cambodian, if and other in the area types of these camps, and where they're scamming people. And they've talked to folks who actually worked there and work there currently, and they cover their faces, and they talk about why they do it and how they need the money and all that stuff. It's such a different angle on it. Also, if you're wanting more information on pig butchering, we have just rolled out, I'm bringing this up, Brian, the digital asset compliance specialization. We call it DAX. We have a whole section in there dedicated to the MO of pig butchering. And so you should get your DAX today.
Get your DAX.
And I just want to give a shout out to Bob Kapur, who was in the audience there wearing his Blue Jays blue. He's a awesome Canadian financial crime legend, I would say, and part of our Toronto chapter. And it's good to see him in the audience. So in his honor, I'm pulling for the Blue Jays tonight for their World Series win. So sorry to get provocative for any of our
taking
LA
a stand. Okay, we might lose some viewers after that. And it's Mariana Van Zeller is
there you go,
the host of Trafficked. Yeah, great show.
She gets highly recommend that show.
Incredible access. Yeah, it's really amazing. Okay, real quick, let's do one more headline that we'll jump into the conversation. So this one comes to us from CoinDesk earlier this month. The headline is "Stablecoin inflows rise before Fed rate decision." Crypto Daybook Americas. Stablecoin inflows surged ahead of a U.S. Federal Reserve rate decision, signaling heightened institutional use of stablecoins, a trend that raises regulatory concerns about their misuse in layering or laundering, despite legitimate adoption. So, just quickly, Aaron, you want to take point on this one?
Well, honestly, there's not a whole lot more I can say on this one, other than one particular point. This story alone shows why stablecoins are needed to be regulated, which is what the Genius Act does.
Okay, and we're going to talk about that. And hey, Lisa J from DC, love seeing that. Lisa just said she's purchasing her DAX today.
Thank you, Lisa.
I think you will not regret that purchase. It is a pretty cool course. So, or specialization. I don't want to call it just a course because it's more than that. Okay. So again, DAX, everybody make sure that during this conversation, you can find it at acfcs.org. You can purchase it today. You can enroll immediately. It's got some of the leading thinkers and founders in the crypto compliance space contributing to that course, and we have some videos of them. It's fabulous stuff. Okay, so today we're going to talk about the newly enacted Genius Act. It's a landmark U.S. law establishing a comprehensive federal regulatory framework for payment stablecoins, and in turn brings the digital currency landscape into the mainstream compliance world. So as stablecoin issuers and crypto adjacent institutions are now treated more like traditional financial institutions under the Bank Secrecy Act, or BSA, compliance teams face a significant shift in obligations around AML, sanctions, and emerging technology oversight. So today we're going to break down what the act proposes, why it matters for your institution, and what you need to do now to prepare for its impact. And one of the first things you can do now is enroll in the DAX specialization to get ahead of these things. So, but let's just level set a little bit. Aaron, I want you to kind of set the scene for us here. So, what are, for people who don't have much knowledge or are new to the crypto world, what are our stable coins? Where do they fit into the wider digital assets landscape? And why are they the current area of focus for legislation at this point in time?
That's a really good question, Clayton. And before I dive into it, I want to let folks know I didn't just dress down because I don't care about FinCrime Fridays. I care about FinCrime Fridays. I have a sweatshirt on that says I'm okay. It's not my blood, but you can't see it very well. And I've got my blood-stained here, just to be festive. So just want to let you guys know that I'm not just rolling out of bed, because I am talking about the Genius Act today. So that's enough to get me out of bed. The Genius Act. I had to pull up the whole acronym. It is the Guiding and Establishing National Innovation for U.S. Stablecoins Act. So that's what it stands for. The acronym is Genius. And when I was giving a presentation at Abrigo, shout out to our friends at Abrigo in Orlando, I had a gentleman say in the crowd, because I was talking about cryptocurrency and how it's legitimized into the financial institutions in our industry and in compliance industry. And I started talking about US regulation. And I said, well, we don't really have it right now. And I started laying out the different states that do have crypto regulation and what they are and things like that. And I said, but the Genius Act, because it was May of this year, and I said the Genius Act is supposed to be voted on in June, literally in just a couple weeks of that same year, and it was. And as I said, we do have federal oversight into the compliance industry when it comes to digital assets, but we don't at the same time because it's all state led. A gentleman raised his hand and he said, well, I guess you could say digital asset compliance is Schrodinger's cat. And I loved that. So it was Schrodinger's cat. And now that we're in October, we've got Schrodinger's box is open because we have the Genius Act. And so in order to talk about the Genius Act, you have to be able to know what a stable coin is in the first place. So it's a type, to your question. Now I'm getting back to your question. I'm sounding like a politician here. Getting back to your question, it is a type of a digital asset or cryptocurrency that's designed to maintain stable value, meaning it's pegged to a fiat currency, like a US dollar. It's not going to be highly volatile like a lot of digital currencies are, cryptocurrencies are. They act as a bridge between the traditional fiat money and the blockchain-based assets. And for the financial crime and systemic risk of it all, stablecoins can move value outside of traditional banking rails. And they are cross-border as well. That's why more and more folks are adopting it. That's why we're talking about it. That's why it needs to be brought into the FinCrime compliance arena and into the financial institutions because it's being used. We need to know how to regulate it.
Yeah, and I would say that, the other element of the story of like why stablecoins, who cares, is some of the history of algorithmic stablecoins. If anybody, remembers the Terra blockchain protocol and the Terra Luna coin, it's an algorithmic stablecoin, which, honestly might be a little bit beyond my understanding of what an algorithmic stablecoin is, but the key concept was use an algorithm to peg the value to the US dollar. And a lot of people said, well, wait, what happens if something goes haywire and it loses the peg to the US dollar? And that's ended up what happened. It kind of melted down the stablecoin markets for a while. So if you look at like a history of it in 2021, there was a huge surge in market value of the stablecoin market from like very low to $170 billion. Then you had the Terra collapse and it sat at $170 billion, went up and down a little for like almost 4 years. And then just in the last 18 months, it's increased from 170 billion to 260-ish billion in market capitalization in stablecoins. I mean, we're talking real numbers here. That's a big part of the financial sector at this point, and it's global too. So it makes sense that regulators would look at this and say, okay, we need to do something about this. This is an increasingly large and increasingly systemic part of the financial system. It's not isolated in its own little crypto world anymore.
Okay. Yeah. Also, just want to point out, Lisa and Julia in the comments highlighted something that we absolutely forgot to mention, that there is currently a 15% discount on the DAX specialization.
Thank you for reminding.
If you use the code right there that's on the banner, DACS15, that ends today, October 31st. Head on over to acfcs.org. You can check that out under the training dropdown, and you can see the DAX specialization there. And if you use that code, DAX15, you'll get 15% off your purchase today. So definitely don't sleep on that. Okay, so back to the Genius Act then and stable coins. So broadly, or I guess even specifically, what is the objective of the Genius Act? Why do we need it now? What's it trying to do?
So it establishes a federal regulatory framework, which we didn't have before. We had nothing. It was just these states doing patchwork work to put in what they thought they wanted to see if something was happening in and out of their state. Well, how does that work with virtual currency? I mean, how do you know something was actually in your state? Was it the customer? Is it the issuer? It's just a lot of things that were and are still very kind of out there in the murky. So the Genius Act does provide that framework. It clarifies who can issue stablecoins. You have to be registered as a financial institution, whether that be an MSB, whether that be an actual bank, credit union, the whole thing. You have to go through FinCEN's BSA program. You have to actually have your license and all that stuff. So that helps. Yeah, that's it. Not that's it. There's a lot more, but those are the two. Those are the biggest things I can come up with when it comes to why it was needed in the first place.
Okay. And that makes a lot of sense. So under the Genius Act, stablecoin issuers, PPSIs, I guess, are now classified, like you were talking about, as financial institutions under the Banking Secrecy Act. So what does that really mean in terms of the AML CFT obligations that being classified as a financial institution? Like what does that mean for them once they become registered as a financial institution?
All the things that you have to do to actually get your license. You have to have a full AML CFT program. That includes the designation of a compliance officer. That includes the internal controls, the independent testing and audit, the training, risk-based procedures, policies and procedures, the whole thing. So you have to run the gamut. You got to basically run your own quote bank or financial institution or MSB to be able to get that license. You have to have a customer identification program. You have to have transaction monitoring, an ability to file suspicious activity reporting. You have to have record keeping, retention, be able to perform risk assessments, either internal or by third party. You need to be able to have the technologies and the capability. I mean, there's a lot goes into getting a license.
Yeah, there's also sanctions requirements too.
Yep,
You have to be able
forgot that
to
one.
freeze and block payments as a stablecoin issuer. You have to have the ability to seize assets. Kind of going back to our earlier story, these AML obligations, and frankly, these were already in place, right? If you look at Circle, we were talking about earlier, actually has a very robust AML program and some really good people there in the AML sanctions counter fraud. This just makes it explicit, right? It just wasn't explicitly specified. And this is not, for our folks who are, I know we have Canadians and others out there, this is not just something taking place in the US. This is a very global regulatory effort. So if you look at like VARA, which is often cited as like kind of a leading, it's Dubai. Dubai is kind of funky because it's within the UAE, and the UAE has different regulators for different areas. But VARA is specifically in Dubai, Virtual Assets Regulatory Authority. They have built out a specific regulatory framework for stablecoins, and they're kind of often pointed to as like a forward-thinking regulator in this space. MAS, same thing. Monetary Authority of Singapore has been putting some effort into regulating stablecoins. Canada now has a lot of discussions going on for specific regulatory rules for stablecoins. So yeah, this is a U.S. specific dialogue on the Genius Act, but I would say that for everybody out there, probably regardless of what your jurisdiction is, I mean, there's some that are further along than others. These are conversations that are taking place around regulating stablecoins. It really is kind of a global regulatory push right now.
Okay. So, and you hit on, that it imposes new sanctions and compliance requirements, things that kind of already existed but are being applied here to stablecoins. So, in terms of the implementation timeline for the Genius Act, it seems like most institutions now are going to be kind of working through what this looks like in practice. So, what are going to be the kind of milestones and compliance deadlines that compliance teams need to, be aware of at this point?
Yeah, I mean, it's an interesting question. I would say that, it depends on what type of institution and organization you are, right? Like if you're a stablecoin, and the PSSI acronym is Payment Stablecoin Permitted Issuer or whatever. Yeah, I forget exactly what it is. But anyway, they're specifically talking about payment stablecoins in the Genius Act, because there are some other like lesser use cases and funky varieties of stablecoins that are not actually covered under this. But if you're using it for payment, right, like the way we traditionally think of it, that's part of the Genius Act. But in terms of like milestones or what you have to do for compliance, it depends on whether you're a current existing player within the stablecoin ecosystem or whether you're like new to this, right? If you are a existing crypto business, like the circles of the world that issue a stablecoin, and you're already licensed, and you should be, because you're still required to get a money transmitter license, or depending on your structure, some other type of license. Some have actually gone, a very few at this point, but some businesses within the space have gotten a federal charter from like the OCC, for example. So, for the most part, like the AML, CTF sanctions requirements are probably not going to be, like groundbreaking for the existing people. Now, it's great framework for anybody new to the space who's trying to get into it to understand what they need to do. Now they have explicit legislative rules that they have to follow. There's still regulatory work to be done on this. So that, implementing regs, still forthcoming. So it's not necessarily all 100% laid out yet. The other aspect of it that's important, I think, is understanding the reserve asset requirement. So you need a one-to-one reserve asset requirement. So if you're issuing US dollar stable coins, if I'm issuing $1 million US dollar stable coins, I need $1 million. So that's really important aspect of compliance. That wasn't as clear before. Now, a lot of the, again, stablecoin issuers advertise that they held one-to-one reserve assets, but there's still some questions out there, including at some of the large stablecoin issuers, as to where those assets are, how they're held, what form they take. Are they in other cryptocurrencies? Are they actually in US dollars? Are they in gold? Which some advertise they have gold. There are not, so there's a lack of that aspect of it. Might actually be one of the trickier ones, is the reserve assets, because there's more rules about how much reserve assets you have to have and how you disclose those reserve assets. And that hasn't always been a strong suit, for some of, certainly not all of, the stablecoin issuers in the past. Go ahead, Aaron.
And I will just add one last thing to that. Well, at least I think it's the last thing. Anyone who wants to issue payment stablecoins, if you want to be a payment stablecoin issuer, the Genius Act is enforceable starting in late 2026. So that's something to remember. Keep it in the back of your head.
That's a good point.
Late 2026.
The other aspect I would say, thinking about like milestones and what it takes to get in the market, there is a requirement for foreign stablecoin issuers. So if you're a company outside the US that's trying to offer a stablecoin, sell it, promote it to US persons, you have to have a comparable regulatory regime, including AML, CTF rules, as the one established in the US and under the rules of the Genius Act. So if the Treasury decides, hey, we'll pick on France. Hey, France, your AML, CTF regime, your stablecoin rules are not good enough. French stablecoin issuers can offer their stablecoin here in the United States. So that's another aspect to consider. I think for some of the folks on this session, you're at banks or other traditional financial institutions. I would say there's a strong argument to be made that banks I think most banks already know that they can use stablecoins as like a payments mechanism, settlement mechanism. They've been proven to be pretty effective and low cost at this point. But I think there's an argument to be made that banks can also get into stablecoin issuing, right? Your job as a bank is to hold a bunch of assets and to have proven liquidity and proven reserves. Your job is to, custody assets and keep them safe and do payments. This is another mechanism to do so, right? So, I think I've seen some publications from like State Street, which is a big custodial bank, and others out there that are already like actively talking about this, exploring it. I don't think it's necessarily a new concept for a lot of the folks out there. But, from a compliance perspective, I think this opens the door to a new, and potentially beneficial payment rail And if nothing else, you should be aware of what it is because it may be coming at your institution.
So speaking of traditional banks and financial institutions, kind of a two-part question here. So for those existing institutions, kind of legacy institutions that already have more robust AML and sanctions programs, what is the Genius Act going to require them to address? Like, are there gaps that maybe aren't covered by existing AML and sanctions programs that kind of legacy institutions need to think about? And what's going to be the impact on those traditional banks and financial institutions that offer correspondent or servicing relationships to crypto and stablecoin related entities, I guess?
I would say the for the first part of the question, which is what is was it going to force traditional or TradFis to address certain gaps? I think the gap is going to be the blockchain transaction monitoring capabilities. And that has been something for years. I've been going, gosh, you FIs need to get on the ball and get licenses to these companies to say, just because a dollar leaves your institution, you can pull up your friendly transaction monitoring crypto transactions and go, hey, look at this. I can just do this because the license I have and watch it go over here because I saw the ACH go to the wallet that belongs to this particular exchange. I pulled up my transaction monitoring. I can then now see it go wherever it goes. And I think that's been something that's been needing to happen. And now this Genius Act I believe, is going to really encourage them and kind of make them do that. That's my opinion.
I think that's great.
And what was the second part of that question?
How is it going to impact traditional banks or institutions that have correspondent or servicing relationships to crypto and stablecoin related either issuers or other entities that deal in those things?
Well, the correspondent bank issue is always such a tricky one. It's just always the know your customer's customer and the relationship that you have with that particular correspondent bank. And of course, you got to know, or at least try to know, your clients. And I think one of the questions that has to be framed now when a FI brings on a correspondent banking relationship is, do you have any stable coin or payment issuers as your clients? And with that, you bring them into the risk assessment, you find out if it's something their risk appetite policy statement can bring in. Can you follow that? Do you have the transaction monitoring? Do they have the whole compliance program as well in the customer that you have? How far do you go when asking those questions? I think it's something that they're going to have to take up issue by issue.
Okay.
The other thing I'll throw in there, not specific to correspondent banking, but the Genius Act does talk quite a bit about, I don't know about quite a bit, but it talks about consumer protections, and building consumer protections into the stablecoin marketplace. Going back to like the Terra Luna debacle was like kind of one of the motivations of the act. So in terms of FIs either in the space already or getting into the space, thinking through your consumer protections, particularly like your disclosures to your consumers about potential risks that they might be taking on. Redemption of stable coins is a big one. Like there's certain requirements around when consumers can redeem them for the US dollar. There was some criticism of the Genius Act that there wasn't stronger protections in there. But there are still requirements in there that, there have to be redemption policies that you put out there to consumers. There have to be disclosure policies. Again, there's the reserve aspect to it. And there's, explicit regulatory like oversight now in here in a way that there wasn't quite as well specified before. So thinking through, those consumer protections, how you're building them into your offering, making sure you have those elements in place is going to be really important, in addition to like the explicitly financial crime aspects of this.
All right. So we're getting close to time, so I'm going to kind of speed run through these last couple of points. But Aaron, you mentioned the blockchain monitoring technology or platforms. What other tech investments are financial institutions going to need to make in order to stay on the good side or stay compliant with the Genius Act?
Well, for right now, this is just my opinion from having read what I've read on the act itself. I would stick with the transaction monitoring for now. I think next layer, whenever that's going to be, and that's going to be FI to FI, they have to decide for themselves what OSINT third party vendors are you going to bring on, because that's going to help, because a lot of them have a lot of information regarding what's happening in the crypto world, what they're talking about, how they're creating different MOs for these scams. I think the second one is going to be OSINT. What do you think, Brian?
Yeah, I think those are great points. As always, compliance starts with your people too. So making sure that your people are knowledgeable, they understand at least a little bit of like the stablecoin marketplace as it evolves, the nature of digital assets is going to be a necessary step. So, might sound kind of like dead basic, right? Oh, yeah, you should train people. We've had that requirement for a million years in financial crime. It's still very relevant, right? You can't and particularly, the type of training where it's like any new payment product, even existing payment products or, business channels, like people have to know about it in order to be able to regulate it, right? So just understanding the technology and the underlying, what a stablecoin is and what are digital assets more broadly, can really be helpful when you're thinking through like, okay, what are my compliance implications and what level of transaction monitoring, et cetera, do I need? And to Aaron's point, risk assessment is the other one. What's your actual risk exposure? Maybe for some of the folks out there, it's still like minimal, but maybe it's not, and some institutions it may be time to revisit your digital asset risk exposure more broadly, right? Like, we still run into this take of like, yeah, well, we don't bank a crypto business. Like it's part of our risk exposure, right? Like we just don't do it. And that's okay. That's fine. But that doesn't mean, you know, 5 years ago, that didn't mean it wasn't in your customer base, in your ecosystem, and today it really, really doesn't mean that like it's not in your ecosystem, right? Like you are, through your correspondence, through your customers, through your subsidiaries, through your products and services, you're increasingly exposed to digital assets. That's not scary. I know it's Halloween. That doesn't need to be a scary thing. But it does mean you need to take into account in your risk exposure and your risk assessment. So those are some of the general compliance things to be thinking about.
Well, since it is Halloween, let's talk about some of the scary parts a little bit. In terms of what either penalties or punishments, I guess, institutions could face for running afoul of the Genius Act. What are those? Like, what are we kind of broadly looking at in terms of what happens if you don't adhere to the Genius Act?
Yeah, I mean, I don't, and Aaron, correct me if I'm wrong, I don't recall any specific additional penalty structure or new penalties within the Genius Act. Now, the fact that there are explicit licensing requirements, AML obligations, consumer protection requirements brings stablecoin issuers under those existing frameworks, which means all of the penalties and bad things that can happen to you under those, regulatory and legal frameworks are now in place, right? So there's lots of ways to get in trouble. The other interesting aspect of it is there's this 10 billion and above threshold. So if you're a stablecoin issuer with 10 billion or above USD worth of coin issued, you fall under the federal regulatory and licensing framework versus below you can do state level. There's not that many, there's very few that I know of that go above that 10 billion. And some of those, again, I think going back to Circle, already are pursuing or have federal level oversight. But, there's some states that are very harsh. Harsh. I don't want to say that, but there's some states that are very rigorous. We'll say it nicely. And there's some states that have strong, regulatory frameworks or their own legal frameworks. Like California just has recently default came into effect. It's effective date for a lot of the obligations still in 2026, but default's in place. However, federal is generally considered to be like a lot of times an even more rigorous standard. So that's another aspect of it. But in terms of like what new penalties are. There's not necessarily new penalties. There's existing penalties that are now applicable to you, if you're in the payment stablecoin world.
It mirrors BSA.
Okay.
Yeah.
Great. Sort of interacts there rather than creating a new structure of things. It fits into what's already there. Okay. All right. Last one. I want to start with Aaron. What are the one or two main takeaways that anybody who's tuning in today at a financial institution or working in this space should take away from the conversation or know about the Genius Act, or what they should implement to stay on the right side of this?
Well, there's a couple things. So first, for your own edification, for your own career advancement, knowing what stablecoins are and training in digital assets in general, just to get yourself up and ready. And then I would encourage you work with, if you're in the management realm yourself and have the ability to make these decisions, I would actually start with a Genius Act readiness assessment. Or you can call that a gap assessment, one of the two, to say, what are our gaps? I think your gap assessment is going to be your best friend. Knowing what you're dealing with and then saying, hey, what are the gaps, is definitely going to be one of your best strengths. Also, you need to make sure that you're reviewing your sanction screening. That one's huge. Make sure that you've got everything covered as far as your program for sanctions. And from there, you'll be able to figure out what's left, like the technical portion of it, like what vendors we need and things like that.
All right, Brian, what are your takeaways that folks should leave with?
Yeah, I mean, I would say, first of all, kind of, this might be an obvious one, but like, know your place within the wider digital asset ecosystem and how you might benefit from the increased regulatory clarity that's coming around the world. So, are you an institution that could be an issuer? Are you a traditional bank that could hold the assets that are going to be required for a stablecoin issuer, right? If it's a one-to-one asset requirement, banks can be a holder of the value, right? Are you a fintech company that can provide customer-facing solutions that involve customers interacting with or purchasing stablecoins? So understanding the potential, not just the existing, but the potential, future role for adoption of digital assets is one that I would say, you should spend some time on. And then from there, to Aaron's point, what compliance obligations and what risks flow out of that role. And it's, for a lot of institutions, what we're hearing now, at least anyways, is not something that they're planning on doing tomorrow. If you're a bank, you're not like, yeah, stable coins all the way, but they're seeing the future. They're seeing the next 5 years. And they're saying, okay, well, in a few years or, 3 to 5 years, maybe we want a cash management, internal cash management platform that runs on stable coins within our institution. And then, maybe we want to consider being an issuer, participate in an interbank, closed kind of blockchain stablecoin system, right? So, know how your institution can interact with this growing digital assets landscape, and then from there follow with what are the risks and financial crime compliance obligations. To Aaron's point, I think it's great to consider that from an organizational perspective, but also a career perspective too, right? Like, this is getting to be an increasingly important part of the financial system. It's interconnected with, the crypto and TradFi worlds, and so behooves you to know about it. Don't be scared.
Knowing's half the battle, right? Okay, guys, thank you so much, Aaron and Brian. Always love these conversations. Real quick, I know we've got some awesome stuff coming up. First of all, membership, acfcs.org. Become a member today if you're not a member and you're tuning in. Second, that 15% discount on the DAX, the digital asset currency specialization, that ends today. There is the code. That is your key to getting 15% off of that course. Head over there right now. If this conversation was inspiring, interesting, troubling to you, go get that knowledge, and you can save that 15%. I know we've got some really great events coming up. Aaron, you mentioned OSINT. We have a OSINT workshop coming up led by the great Pamela Clegg. I believe that is correct. Brian
Yep.
or Aaron, what's the date on that? I know it's in the next 2 weeks or so.
Yeah, pretty soon. That's Thursday, November 12th. Going to be a 3.5-hour workshop giving you some of the fundamentals of OSINT, teaching you how to do the basics of people search, corporate record searching, and really cool. We're going to be incorporating. It's not going to be the sole focus of it because we're going to be doing kind of the classics too. But we're going to be incorporating generative AI into this too. So there's definitely ways to smartly and safely use Gen AI tools, research tools, the Chat GPTs of the world for OSINT, and we're going to be teaching you how to work it into OSINT investigations as part of this, and spend a little bit of time at the workshop doing a practical exercise, a little bit of OSINT hunting for you to get hands-on with it too, not just theoretical exercises, theoretical knowledge and lists of tools and stuff, but asking you to practice. So it's going to be a lot of fun. Definitely urge you to check that out on Thursday, November 12th, coming up soon.
All right.
Also,
Aaron,
can I plug one more?
absolutely. I was just about to ask.
Yeah. So tonight I am flying out to Eastern Europe. If is there any Eastern European folks that are on the line right now, please come by the Digital Forensics Conference in Belgrade in Serbia. I'm going to be giving on 2 panels on November 4 and November 5. And then the second day, November 5, I will be doing a workshop myself, which is SAR STR, a masterclass in writing to be EU compliant and CEE compliant for your narratives. So come on by. I know that it's short notice, but if you're in Eastern Europe, just think about it. That's all I ask. Just think about it.
That's right. Okay, guys, thank you so much. Thank you to everybody who tuned in. We value you. We appreciate you. We love having you in these conversations. We'll be back next month. We're going to do our FinCrime Friday chat next month, a week early to accommodate the Thanksgiving holiday here in the U.S. So we'll be live on Friday, November 21st at 12:30 Eastern. That's going to be a great conversation. Again, we're going to be talking about sanctions and evasion and sanctions evasion evolution, I guess, topics. Anyway, you don't want to miss that one. It's going to be an awesome conversation. Again, we hope to see you there. We appreciate you tuning in this week. We hope you have a great Halloween. Stay vigilant, and we'll see you next time.
Bye, everyone.
Thanks, everybody.